Good morning. It's Monday, December 7th. Welcome to The Street Live. I'm Catherine Ross, and we're joined by Jim Cramer. Jim, the Dow is down, the S&P is down, but the Nasdaq is slightly up. So how is Action Alerts Plus going to be approaching the markets on Monday?
Well, we feel strongly that it's time to put some money to work on things that have come down, irrespective of where the actual market is. We can talk about some of that during our Action Alert show. But I would say that in general, there's just a lot of optimism about semiconductors, which is very good for us, particularly because Intel may be losing share to AMD. Intel may be losing share with Apple. Big share donor that we like. I mentioned the semis because that has been a unique focus of Action Alerts, and most people are not there. Most people have one. We have multiple ones. We don't care. Those are the best stocks to be in. And then the other things that we're doing is we're taking we're taking a proactive approach on companies that will do well after the pandemic ends. Certainly feel like that's going to happen, and I'm looking for, just looking for opportunity left and right. You could argue, wait a second, if you think that that there's a big pandemic wave coming, as I said this morning on Squawk on the Street, how can you not buy more CVS? But CVS is going up a great deal. It is the preferred way to play the pandemic, and we're sticking with it.
Well, and Jim, there are some big moves being made because of the pandemic, but not necessarily in the market, and that is location moves. Now, Elon Musk is reportedly looking at a move possibly to Texas. We've got Goldman Sachs looking at Florida. I mean, what does this mean for places like NYC and California? And could we see Texas and Florida become very competitive to New York and California?
Well, you're from Texas, so I think you know that Texas is going to have a real opportunity here. There are plenty of people who know how to code. I was mentioning on air, I said there are executives on the West Coast who are biased, who think that the coders are all on the West Coast. Now, of course, on Twitter, immediately people think I hate Texas and Florida. I lived in Florida. I loved it. In Texas, there are, in Austin, there's all the coders you need. In Florida, an unbelievable state system. You got all the coders you need. You could have all the coders just around Cape Canaveral. I feel that this is a canard, that the coders will go where the companies are. The companies, when you look at what Elon Musk wants to do, I think what Elon Musk wants to do is give himself a pay raise and give all his people a pay raise. Texas, you make more money. As the rates go up because of Biden, why not arbitrage it and find places that you can make more money? Goldman Sachs is not bringing its people back because of the pandemic. So why do they have to be in New York? I mean, if everyone's doing it by Zoom, what's the point? And I think that you could say, well, wait, there's going to be a pandemic, it's going to be solved, and the vaccines are going to be distributed, so why should they leave New York? And again, I think that the answer is that you're going to go where the money is, and the money's in Florida. The hedge funds will trade anywhere you want, but this is a wealth management business. And the wealth management business does not need to be in New York, particularly because anyone who's running that business has got to be forward-thinking enough that people with wealth are mobile. So I think that Musk is right to look at Texas. I think Goldman's right to look at Florida. I do think that there's not going to be an exodus from California that is so brutal that there are many companies set up in Colorado, many companies set up in Texas. But the taxes are too high, and the taxes are too high in New York. So both these companies want to retain employees or hire people, and the best places to do them are Florida and Texas.
Yeah, and it's also interesting.
Tennessee is also very good. I've had First Horizon on many times. I don't want to say Tennessee. I read my feed, Catherine, and there are people who are adamant, unless you phrase everything perfectly. Like, unless I had said there are so many coders in Texas, but the executives out in California don't seem to realize that. I guess that's what I was supposed to say. Instead, I was just saying the executives don't believe it. And, you have to be completely clear, or else people just think that you don't like Florida, Texas, and nothing could be further from the truth.
And it's interesting, Jim, because it's not just Wall Street looking to relocate. I mean, you're looking at journalism kind of changing as an industry, too, where we used to have heavyweights in California and D.C. and in New York, and now you're seeing more job opportunities pop up, specifically asking for people to be in places that are not necessarily the hot spots for news as we once knew it.
Everything changed with Zoom. Everything will change with 5G. There really is I got to tell you, look, I'm here, right, in the New York area, but that is just totally by habit. I used to be in Pennsylvania. I absolutely loved it. I came here because I'm on New York. But there are many people from the network who work from home, and no one cares. I mean, one of the things that happened with the pandemic is you realized that the office is really irrelevant. Yes, you want to see people periodically, but look, the office parties. I mean, I'm trying to lose weight. So is everybody else. I just think that we're in a world where it changed overnight. My stepson works for Zoom, and what the heck? I mean, they're everywhere. Zoom is the way that people do meetings. The SPG, the Standard & Poor's Group buying IHS Market, totally done by Zoom. Every one of the major deals is done by Zoom. And so I think people have to recognize that there's no need to be in New York. I don't want that to happen. I think New York's the greatest. But look, the pandemic has decimated New York, and it's not going to be that easy for a lot of things to come back.
Share the love. Now, Jim, let's talk about your office. And by your office, I specifically mean Mad Money, because last Friday you pointed out that investors were waiting for news on stimulus this week. So what happens if by the end of the week we still don't have stimulus?
Well, I think by the end of the week, if we don't get stimulus, what it says is that they're waiting, the Democrats waiting for Biden to get in. So there'll be a bridge to January, the last week of January. And a lot of places are going to close in that period because there's a lot of COVID coming Thanksgiving. But I think the Democrats are totally willing to sacrifice those people because they feel like that the states are the ones that need the money as much as the small, medium-sized business. The Republicans went up to small, medium-sized business, and maybe they want to help the first responders. But I think that half a loaf's better than none. I mean, if the president's offering $1 trillion deal, the Democrats should take it if they care about the working person. That's not a Republican or Democrat thing. It's just like, go do it. You can then do another one after it if it looks like you need it. There's nothing that says you can't do this one and then do another. There's a time. We're at a time, a very crucial moment, where a lot of companies are going to close. We don't want that, Now let's just understand. The companies that are going to close are companies. I'm trying to get my computer. The companies that are going to close are companies that we don't trade. So, I mean, you can be really heartless, Catherine, and just say it does not matter. And I can't do that because I have a heart that beats. But if you're a pure trader, it doesn't matter. Those companies are in the way of the big box companies. And my very good friend Rick Santelli, who favors the big box companies, I think, they're the winners.
Jim, before the pandemic, one of the biggest things that we were looking at in 2020 was the rollout of 5G, and that also ties straight into AT&T, which is part of your mad dash this morning. Now, this leaves me all to wonder, Jim, if AT&T is more than just a 5G play, if it's also a streaming play because of HBO, and if that's worth it to consider to add to your portfolio at this stage.
Well, I've got to tell you that I'm shocked that so many people absolutely are buzzing about this. But it's a very risky endeavor, and it may cost them a lot of money. We see how much it costs Disney, and Disney's got a much better library. It does not make me attracted to AT&T. Now, others are obviously attracted, and the chart's looking up, and it yields 7. And those people are very much more. The buyers are not as risk averse as I am. I don't like to reach for yield. I do like Verizon, but I think it's interesting. Why I brought that up was that I think this is a very risky endeavor, and people are just assuming it's going to work. That's what's going on with the stock. They think it's going to work, and if it's going to work, the probably stock goes to like 32, 33, and maybe that's what people want. I mean, go get the 32, 33. It's not bad.
One sector that you have not liked, Jim, is oil. And now you alluded in stop trading, but EXXON is facing a potential proxy fight from engine number 1, which was launched by Chris James. Do you think that this is worth paying attention to at all, or does this just make a firmer case for you to stay away from oil?
Times that some pop-off can take a position, and the Wall Street Journal gives it incredible coverage. That does matter. So what happens when a real guy buys? when this guy's real, and there's sizable guy buys. It's going to matter a lot. That's why I know Chevron is Chevron and Pioneer are the two that are working the fastest, I think, toward ESG. Another reason why I recommend those two. Now, those are the only two I recommend. Remember, it wasn't like when the oil got down really low, I said, okay, well, these two are going to work. I don't like oil because Biden won the presidency, and he didn't like oil. But I do think that there's room in your portfolio for a Chevron for yield or a Pioneer for growth. And I'm going to continue to say that even as people think I hate oil, I will offer oil alternatives. They're not owned by Action Alerts because I don't think you need to own them, but those are the two to own.
I'm glad that you mentioned President-elect Biden because he has been making some choices. I mean, he's named a new coronavirus czar. We've got a new health secretary. We've got a new CDC director. And on top of all of that, we also have the FDA meeting this Thursday to decide whether or not it will grant an EUA to Pfizer and BioNTech's vaccine. Now, what do you want to start hearing from the officials that we've had Biden propose, and how are they going to handle the pandemic going into the spring with a vaccine on its way?
Okay, we need to hand guidance about who gets it first. Dr. Gottlieb today in the Wall Street Journal lays it out really, really easy. And by the way, the people at the long-term care facilities will have the vaccine brought to them. Now, you could say, how about the first responders? Well, they're going to get it. I think the issue is teachers versus people over 65. The fact is that as time goes on, we'll have more and more vaccines. But there'll be a certain point where J&J will have its. There's a GlaxoSmithKline. We haven't heard from AstraZeneca lately. There's a belief that Moderna might have more vials than we think. But we're headed toward a period where we're going to beat this. And that's what the market is saying. It won't necessarily be in a straight line, but we are going to beat it. And I think that when you see Southwest Air upgraded, because people are going to beat it, we're going to beat it. When you see the Norwegian cruise ads, you recognize that it's being beaten right now. I've been recommending that people focus on this company, Visby, VISBY, because it has a handheld PCR. Remember, PCR is the gold standard. PCR that's one and done. You throw it away after 15 minutes. It tells you there's a lot of businesses that are using the Visby. Immediately on Twitter, people said, well, Jim, that you said you liked Abbott. Well, I did like Abbott. Abbott had this antigen thing, but you had to give people your data. People don't like to give data. The same way that Apple and Google came up with an unbelievable contact trace system, and it didn't work because people won't give people their data. We're Americans, and we don't give it. In China, they make you give it. So, I mean, I think that there's a lot of things that are being done that are good in terms of what from Washington. I think Warp Speed turned out to be really great. But we need the pecking order. And we also need to hear what they think is going on in terms of the number of vaccines, because we don't know. I mean, it seems like, Moderna probably knows, and we don't get the number. Why don't we get the number?
Jim, you mentioned China, and I want to hit on that really quickly because Reuters is reporting that the U.S. is preparing new sanctions on China officials following the country's lockdown on Hong Kong. But looking at this headline, is this something for investors to be watching, or is this something that the market is purposely overlooking?
Well, look. I mean, Tesla up 27. They got a big car coming in China. That's going to be incredibly important. Nike, Action Alert name, going higher. Starbucks going higher. Oh, Starbucks is down. That's a buy, by the way. But the Chinese plays have been going up and up and up. And they seem to recognize that the president is no longer in charge. The new president's coming in, and this will all end. The capricious nature of the president just coming out and saying, okay, these guys are on the blacklist. I mean, what are you doing? I mean, just focus on the people dying. But no. I mean, I think a lot of people, myself included, hate him or like him. He's done. And he's still sending me things about Georgia and the election being fraudulent. And it's like, no, come on, man. We gotta get on the case. We gotta save lives.
Jim, Airbnb is planning to price above the range that we had previously expected. They're now expecting a $56 to $60 a share price range. When I asked if you'd consider the stock, you said yes, but that was before it went up above 50. So what do you make of this adjustment?
Well, I think it's gonna be one of those where the question is, will it open at 100, and you hope it doesn't. Um, you have a lot of young people coming in, different from Uber and Lyft, where it was still the old guard. The new guard likes Airbnb very much. They're gonna just lap it up. I think it's really important to recognize that they love DoorDash. They use Airbnb. They stay at Airbnb. They order from DoorDash. DoorDash is now just an oligopoly, actually duopoly, frankly, with Uber. They're both good, and you won't be able to get them unless you pay up or you get them on the deal. But we at Action Alerts have no leverage to be able to get anything like that. I mean, it'd be unbelievable to get on the deal. If you can get any stock in the deal, it's fantastic.
Jim, speaking of Action Alerts Plus, that's where we're heading right now because you guys,
Okay.
you and your team, Jeff Marks and Zev Fema, have been very busy this morning. I've been seeing some alerts, and I want to head on over to our members only show to discuss what kind of action you're taking in this market. So head on over there with us at actionalertsplus.com. I'm Catherine Ross, and we'll see you tomorrow.